What's going on, everyone? Honzo Moraki here. Today, guys, we'll be analyzing AUDCAD, and yes, if you guys like the past video, please leave a like and subscribe to the channel. Let's get it, baby. Forex is the future. You know the vibes. You know what we're about. Now, looking at the AUDCAD on the weekly time frame, what we need to do is take into consideration the market structure. Structure is everything, guys. With forex, structure is everything. Now, as you guys can see, the market has been playing along those lines. It has been ranging. Now, what you need to do is create more of the support and resistance along those lines. Support and resistance. Oh, sorry, I was analyzing. So yes, let me show you guys how I came about this. I'll just explain. Let me remove some of these things. So we have a more clean chart. Let me remove this real quick. Okay, so yes, now yes, we have a clean chart. As I was saying, guys, we had like a clean chart. So basically, we saw that the market has been ranging in along these lines. It has been ranging. It has been ranging. I mean, pure supply and demand. So what we need to do is dive into all those lower time frames just to get more confirmation of what's going to happen. Like, where do we need to take ourselves and buys? You know, as much as we have said that the market has been ranging when it comes to this area, this lower area, we are looking for selling opportunities. Now, looking at this, we can anticipate that this is what we are anticipating. What we are anticipating the market to do is to move from this level all the way up to there. All right, so yes, now with that, we need to take into consideration all the patterns that we know that the market forms, just to help us be able to see where the market will be going to next. Now, what I see on this chart, basically, I'm seeing more of a what's this? I'm seeing more of a head and shoulder type of structure. I'll show you where it is. Just bear okay here. I'll show you guys how I'm seeing this head and shoulder. Now, this will be my first shoulder here. Sorry, this will be my first shoulder. Yes, this will be a head, and we'll have our second shoulder. We're anticipating the market to move all the way up. Now we are building confluence. Guys. We are building confluence. Now we have to confluence before jumping into our trades. Now, building confluence is more like building confidence. It's more like proving that your setup is correct. You need to build confluence each and every time. Now let's take with the Fibonacci retracement and check what's going to happen. Check those levels, those key the price range. We need the price range. Now, looking at the Fibonacci levels, we can see that price is on the 50. We know with the 50 that it's a very important key level to take into it's a very important price range to look at. You know that the range of the price is around 50. Now with 50, you can see what happened here. It actually went up, and now we're seeing that here there's a high possibility that the market is going to shoot up. Now, okay, let's dive into deeper and see what's happening. We are looking at the weekly time frame. Now let's dive into the daily time frame and see what's happening. Now, mind you guys, the market is not moving, and when the market is not moving, I mean, like, it's a Saturday here in South Africa. I don't know where you'll be watching this video from. Now, today is the 10th, no, it's the 2nd, I meant 2nd of October. So yeah, it's a Saturday. So what I'm actually seeing when I dive into the daily time frame, I'm seeing that price came in, it came to this level. Okay, let me try and remove this pattern here. I'm seeing that price came on our key level. Our key level were very okay. With this ones, now you guys need to take these ones into considerations. These are the trades that I actually took advantage of quite some time. I saw it, and hopefully I'll leave a link to my free signals and analysis. We'll be it's more of a trading community. What's this? A community trading, a trading community group chat. Yeah, what's up for WhatsApp. And if you're interested and you want to make money while you learn, you can jump in. It's open to everyone. There's no need for you to pay for anything. Everything there is free. Now, yeah, I'll drop the link below so you guys can actually join us, join the winning team, as they say. Join the winning team, baby. Join the winning team. Okay, now let's get back into business, guys. Now I'm seeing that price will actually, it has a probability of coming down to this level 0.1146. That's where I think price will come to. Okay, as I'm telling you guys, we're going. What we are actually doing here is top-down analysis. We move from the higher time frames down to the time frame that we actually want to take advantage of. Now, with me, guys, I'll only end up at the hourly time frame because I only deal with swing trading. I love swing trading. That's where you make money with currencies. But then you can also go into, I'm not saying that scalp trading doesn't have money. It does have money, but then it requires a lot more of your time. You need to be on the chart all the time, checking the movement. Now with swinging, you can actually just let your trades run while you have your stop loss and you take profit in place. Then you move away. You can spend most of your time doing whatever. You can be in school or at work. Yes. Now with the daily, we have seen that price is about to hit this level. If price rejects on, we have built confluence that it's on the 50 with the Fibonacci retracement. It's on the 50, and then it will be creating a double bottom type structure on the daily. Now let's look at the 4 hours. Let's dive in deeper. We dive into the 4 hours. With the 4 hours, okay, I've already ran my analysis. Hey, I'm sorry guys for just leaving you behind. Okay, now let me remove a few of those lines. Sorry, I apologize for such. It's a mess. No, I apologize. Bear with me, guys. Bear with me. Let me remove this these lines quickly. That I tried hiding them, but then they popped back up. Okay, now looking at this, this is where we saw that we had charge, which will tell us that this will be building more confluence that we can take in. We can go in for the kill with buying opportunities. We can take advantage of that. Now we are building something, baby. We are building something. Now stay with me, guys. Stay with me. Now with this one, we are actually seeing that price hit this level right here, this key level. Let me move this line here so you can see we have this resistance area. This is a very important key area. Now you need to keep this in mind, guys. Okay, what we are actually seeing here, baby, it's a downtrend. I'm sorry for saying the baby too much. I don't know why I get excited with the charts while I'm analyzing, but then okay, let's get down to business. We can see that we are caught up in a bearish trend. Now, okay, what we are looking for a reversal type structure. We're looking for a reversal type structure. Now with the reversals, you know, your reversals are actually your double tops, double bottoms, your head and shoulders, your inverse head and shoulders. Those are your reversal patterns. Now if you don't have the candlestick Bible, I would advise you to join the group, the WhatsApp group that will be posted below in the link. Now, okay, let's get down to it. If you know the reversal patterns, then yeah, it's a good way to take advantage of the market. Now, okay, let's go into it. Now, I'm not saying that the market is going to play out forming this type of shape that I've drawn right over here. This is my prediction. This is what I predict. It might not hit this level. It might actually come back, and let's see your candle closing in around those levels, and actually a huge weak rejection coming all to this level. Now, okay, since we are caught in a bullish trend, we know that the market can continue in a bullish trend all the way. Eventually, it will have to hit a key level, and we saw that this area is a strong key level due to the supply and demand that we did in the higher time frame. Now, okay, with this, what I'm seeing, I'm anticipating price to come to hit this key level. This is, mind you, this is the 4-hour that will have a double bottom type structure on the higher time frame. With this one, we know that a reversal pattern has to form before we actually take off, which is this right over here, the double bottom that I've spotted, that I've drawn right over here. Obviously, even if it comes and hits in the lower frame, there will be a confirmation of a reversal through probably a inverse head and shoulder or a double bottom, which will tell us that it's a buy. All we have to do is to wait for the market to give us actually that signal. Now, signals are your candlesticks. You need to look into your candlesticks, know what your candlesticks are telling you. Candlesticks are there to tell a story. You need to interpret what the candlesticks are telling you as a trader. That's your job actually. You are looking at the price movements, then you interpret what the candlesticks are actually telling you. Now let's get down into it, baby. I'm sorry. I'm into baby too much. Now let's go down into the 1-hour time frame. With the 1-hour time frame, you know, as you go lower into this lower time frames, you get more noise. There's you find a lot of candlesticks. There's a lot of noise. There's a lot of buyers, a lot of sellers at the same time. You know, it's a bit confusing. That's why we tell you that. That's why I tell you that you need to start your analysis from the higher time frames down to your lower time frames. Actually, you need to do your top-down analysis before you go down into this type of analysis whereby you go into the lower time frames and all that. But then the scalpers are using the 1 hour as their higher time frame. You cannot only jump into the markets and start to analyze on the 1 hour charts and all that. Like, the market will kick you. Like, that's just it's more like I'm entering into the market, and then I'm saying, okay, I'm saying that this is in a bearish trend, and I'm saying I'm going to jump into a trade right here. The market will might just go into the opposite direction and actually blow your account, then come back into your direction and play out before you even run into profits. It might go up, but spike up, and then we know manipulations and all that. Now, yeah, with all that being said, I'm anticipating for price to move from this level, come back to play around this key area. Then from there, we go to the upside, creating that what's this, the bullish type of structure. Oh yes. What's that? Bear with me, guys. I'm just trying to find this thing, the path. Yes, now with the path we can go in. The price might just move in such movements. We all know that price doesn't move like that, and that, and yes, we might just need to experience such type of a movement. Not only that one impulse move like that, the market just keeps moving in such zigzag like movements. That pattern I've just drawn. Okay, yeah. Now with this being said, we are hoping that the market goes in, but then with the confluence that we have built, we are certain that the market is going to move up. We are certain, and then all we need to do right now is to wait for a signal from the market to tell us that the the bulls are stepping into the market. The market will move up right now. Yes, you need to know all your pin bars and all that. The pin bars, your candlesticks formation. You need to know all those. You need to go into depth with that so that you can get to have an unfair edge against the market. Now, okay, with that being said, there's something that I want to share with you. A little secret that most traders use. It's not actually a secret. It's more of, knowing that knowing more of your pairs, the currencies and all that. Now with the currencies, what you need to look into, with the currencies, I mean those that involve the dollar, like the pound versus the dollar, the GBP USD, or the Euro USD, USD ZARs, all those. Before you go into them and just actually take the trades, I'd advise you to go and check the dollar index. Now with the dollar index, this one was me analyzing this, anticipating this downward movement here, and I thought it's gonna go down, but then yeah, I didn't actually take the trade on that. I'm just getting what will happen to the dollar pair that has the dollar. Now what are we seeing with this one? Let's go up to the higher time frames. Now this is, oh, not 1 month, weekly. I need the weekly. We're looking at the dollar index, unfair edge over the market. Let me check something real quick. Yeah, we start off with the weekly. Now, what I'm seeing here, guys, our what's this? Before we can draw our support and resistance, the supply and demand. Now, what I'm seeing here, it's actually a very nice inverse type of structure. Oh no, sorry. Let me remove this real quick. I'm seeing this right here. Yes, this is a structure that I'm seeing. This will be our head. I'll come back to here. This will create our right shoulder. Then we'll go up like that. And currently we are at our neckline. As we can see, we have just then we'll be going in for the kill. Number one, that's what we're seeing. And then with this being a head and shoulder, we can see that it has created the double bottom before it becomes a whole shoulder. This whole thing is a shoulder. It's a head. I meant a head. I'm sorry for that. This whole thing, let me just throw in that thing right here real quick. this whole thing will be our head. Why is it misbehaving? Why is it misbehaving? This whole thing should be our head. Yes, this will be our head. Nice head there. Then we'll be having your left shoulder here. It's not doing the thing. Right shoulder. This thing is not doing the things that make the pose to happen. Okay, if you know the video, you know what I'm talking about. Yeah. So yeah, just trying to remove. It's not cooperating. This thing. Yeah. Anyway, let's just leave it like that. It doesn't want to remove all those things. Let's check. Let's look for our supply and demand, supply and demand, supply and demand, supply and demand. Now, as we can see, it's clear. This one is clear. Now this one is clear. You can see your key levels. All you need to do is look at how the market is moving. You have your supply structure here. Then let's take this also. So is there, but then I'm seeing double, I'm seeing double, but then there's a high possibility that yes, it can be this, or you can cater for this lower one, and just say yeah, you can cater for that one also. Then also you can come back and cater for this one. You can come back and cater for this one, guys. Then yes, that's just how it is. This is how I'm looking at it. We have our supply and demand area right over here, and we are anticipating for price to actually break out, retest. If it comes back and retest and fails to break below the structure, then we know we are looking for our buys. This is the principle of buying low and selling high, or buy low and sell high. That's just the basics. Forex, it's all about the basics. There's no holy grail strategy. The strategy will work better than this one. No. All you need to do in this industry is to confluence your work, build confluence. That's all you need to do. You need to build confluence. What I'm seeing is a possible okay, let's go down into the fib ratios before I can say I'm seeing a movement which is not there. Now we are building confluence. It's more like we're giving facts based on what's this, based on evidence, proof. We are proving what our findings are. Now with this one, when I look at this candlestick right over here, the candlestick has failed to break above the 38.2 level. But then what I'm seeing is actually price might actually come from this level, come back and retest this level. But then before we can say anything about that one, we need to look at the lower time frames. And see what's happening and get the whole story of the market and how the market is moving. So yes, let's dive into deeper. Now with this one we can go even higher. With Fibonacci we can go higher. Let's see if we have a higher close where the price left with rejections. Oh yes, we do. We actually do, guys. We have this area right here. It's almost the same. So yeah, the first one, yeah, we'll see what's happening on the lower time frames. This is the weekly. But then we have seen that prices has bounced. It has created the double bottom right over there, and we are anticipating that it will move from this level, this lower level, to our resistance area right over there. Now with the daily, we actually getting we actually got an inside candle, but then we need more confluence. We need to see what the other candlesticks are going to tell us as we look into the lower time frame. Now with the inside candle, it symbolizes, it actually gives us a signal of saying that the bulls are out of power. Now the bears are stepping into the market. But then let's look at the lower time frames and get what's going on there. Let's see the 4 hour, what the 4 hour is telling us. Now with the 4 hour, the 4 hour, I'm getting that we're getting that structure. We have more of a head and shoulder. If you guys look at it correctly, you can see that we had a key, the market created a key area over here. We can see there's a key area. Now the scalpers would use such small movements to anticipate the movement of the price. They will use this small, they'll take advantage of this small thing. Now we can see that price actually came and created this key area here, went down, came back to get more strength. It actually broke out of the structure, but then it couldn't retest, and then keep moving upwards. But then it broke out and actually broke back in, went back for a retest. Then we were looking for more selling opportunities. We are looking at more selling opportunities over there, guys. Now okay, let's jump into the 1 hour time frame, see what's happening. 1 hour time frame. With the 1 hour time frame, it's a head and shoulder. You guys can see it's a shoulder. We have your head here, then our right shoulder there. Then yeah, price is moving downwards. You have our double top type structure here, and then came back forming a triple top type structure. We'll be looking for more. I'd say we'll be looking for more selling opportunities with this one. Yes, we'll be looking for more selling opportunities. This what I'll be anticipating. Now with the dollar index, if the dollar index is actually going down, let me show you what's going to happen. Now if the dollar index falls, now TBP USD, it will be buying. Now if the dollar falls, then what other pairs USDs are, it will go down with it. Now USD JPY will go down with it. What else? NZD USD, it will go up. Now basically the pairs, let me see if I can throw in it a thingy here. Let me see if I can just note this here. Now what I actually mean is that dollar, and we have the ones that are blah blah blah, then the dollar. Okay, with this one is the dollar, the other currency. Now with this one's try to move it. Yes, this is all I mean. If price drops from this level to this level, what we actually mean is that the dollar compared to this other currency, it will actually go down. Now if there's another currency and a dollar, it actually means that that type of pair, it will actually go up. It will be the inverse of this movement. That's all that actually means. Now that's the secret with the dollar index. Now you guys just have to take advantage over such movements. When you see such movements, go in for the kill, but then wait for the candlesticks to tell you what's really happening in the markets. Wait for that. Wait for the candlesticks to actually confirm your movements. Build confluence. That's all that it is. Now the market is a device of taking money from the impatient traders to the patient traders. You need to wait. It's a game of waiting. Now patience is the name of this game, gents and ladies. Patience is the name of this game. If you're patient enough, you'll be persistent, you'll be consistent when it comes to making profits. There's no way that you have a strategy whereby you're not gonna lose some, but then you need a strategy though when even if you lose, your losses will overpower your losses will be overpowered by your wins. Now what do I mean? You need to have this type of graph when you actually review your progress. When you review your progress, what do I mean by that? You review your progress. Now let's say you take your win like that, then it comes a time about you take your loss, right? Then you take your win, a huge win, then you take a smaller loss, then you take another smaller win, a huge loss, right? Then you actually make another comeback, then you lose a bit, then you win and win, then you lose a bit and you win. There's actually a graph that you need to see when you actually analyze your winning rate. Now you don't want to be the type of trader whereby they have this type of structure of, and they analyze their progress, they are having things like this, whereby they are having a win, then they lose, then they win, then they lose, then they win, huge win, then with no proper risk management, you lose everything. That's why it is vital for you guys to have a proper risk management skill. That's all you need in this game to survive. That's all you need to have this type of structure. Lose, but then your wins need to overpower the losses. Even if you take losses, you're actually growing your account. That's all you need to do. And then the secret that I will also share, it's not a secret that say it's something that you must develop. You must actually come up with ways of winning in this type of thing. Now you don't want to win in forex also, but then you need the benefits. Now when you make profits, you need to grow your bank account as much as you're trying to grow your trading account. That's just what you need to do. Focus on growing your bank account as much as you are focused on growing your trading account. What do I mean by that? When you take a trade and you win, let's say you deposited 600, then you need to take, okay, let's say you deposited 600, then you make another 800, you make a profit of 800. take out the initial amount and put it in your trading account, right? In your trading wallet, you know what I mean, in your brokerage wallet. Then when you, that's for when you take losses. That's your go-to money when you take losses. There's no need for you to go and dig into your bank account. Now let's look at the remaining eight. You have what? You have 800 in the account. You have removed that 600. Now with the 800, then you double it. Let's say you double that money. When you double it, then you take out your initial gain, your 600. Then your trading account is growing, and then from that 600, you take that 600, you take it into the the broker's wallet. Then you go in and trade again, not with all that money. You have taken 600 from that. What's that? You had your 800 and you doubled it. You have a 1.6. You take out that 600. You are left with 1,000. You go in and you trade again from the 1,000. You double it or you triple it. Then when you triple it, you have your 3,000. 3,000. You can actually now pay yourself as much as what, 1.5, right? 1.5. You take out 1,500. Your wallet in the broker is actually growing as much as it is growing with the trading account. Now that's how you win. That's how you win. Then yes, you can take money from that the brokerage account, take it into your bank account. Your bank account, it grows as much as your trading account. Now that's all I have for you guys.